Welcome back. You're still tuned into MF Corner on CNBC-TV18. We still have with us Swarup Mohanty, CEO of Mirae Asset Investment Managers, and Evan Metcalf, who's the CEO of Global X ETFs. Well, gentlemen, we've been talking a lot about the global scenario, and you just mentioned as well that, fixed income as a category has been doing well. There's a lot of focus on US Treasury yields as well. Can you tell us in more detail which within the ETF investing segment is doing well? Which are the products which are doing well? Is it higher demand in thematic investments? Is it fixed income, as you pointed out? And do you see any product-oriented gaps in the market right now?
Yeah, sure. So I think, as I mentioned a little bit earlier, I think fixed income is definitely the key area of focus. And that's, I think, to do with market dynamics at the moment, where yields are. But I think it's also a little bit to do with, in Australia, we're seeing some of the demographic of ETF customers is effectively shifting a little bit. So a lot more of that retiree or later stage investor is actually coming into ETFs. So hence, there's a bit more of a push for defensive type products. In terms of other trends in the market, we've seen, I think, a real flight to, I guess, some of the more vanilla passive type products. So there's been a big trend of cost compression in the Australian market for the last year or so. So we've seen a bit of sort of tit for tat between issuers in terms of prices coming down across some of those real benchmark funds, and I think that's really centered around how people are looking at their portfolios now. So using those real low cost vanilla benchmark type indices as that core of their portfolio, and then looking at satellite exposures as well as to how they can get some of the more interesting corners of the market. And so I think there's probably cost compression in the core, and then more interesting things and more innovations coming in those satellite exposures. So we've had some interesting innovations around use of derivatives, so covered calls, option writing strategies that are generating additional income, which in a market where people are looking for yield and using fixed income, having equity linked products that can generate sort of 12+% per annum is a real interesting story. So we're looking at more innovation in that sort of area, and some of the I guess slightly more exotic products, and I think in a way really taking from some of the history of things like the structured product industry and bringing that to a broader market via ETFs. And then we're also looking at definitely thematics is an area where there's been a lot of action over the last few years. It's probably slowed down a little bit in 2023, but I think there's some real key areas in there that can have a big impact going forward. I think the one that springs to mind massively is AI. I think that's something that there's definitely pockets of AI exposure across different types of products in the market, but as that industry evolves, there's going to be that ability to get more sort of pure play exposures to that theme, and that'll lead to the development of more of those the ability to bring out more different types of ETFs around that as well. So that's something that we're keeping a very keen eye on as well.
I can imagine the interest of that, being very big. It's pretty much what everyone's been talking about. Swarup, what do you think in terms of the product offerings that we have in India? Because we're not quite there yet. I know we're starting. I know it's grown a lot. But do you see any gaps in terms of what we can introduce to really push up the passive share in India?
See, Pavitra, in India, we are at a very interesting situation because, we will go from, say, active to passive, or maybe grow passive on its own. It's very interesting because on the active side, let's all realize that post-categorization, what actives can offer is only that much. What actives can offer beyond that is differentiation in fund management style. But for differentiation in products is where passives comes in. Wherever there is a universe available, investable universe, we can create an index. And on that, through factors, we can give multiple indexes. Some of the products which Evan talked about is something which will evolve in India. We're already seeing a fair amount of distinction between the core and what Evan says is absolutely already happened in India. The core market cap indices are available at dirt prices, right? That disintegration has happened. But it's when a fund house actually goes out and ideates something that the cost sort of will vary and should vary, because there is a price for a good idea. And that mix will be interesting as it unfolds. So just give you an example, we believe that the next 15 years is about manufacturing. If one were to catch manufacturing early, get into a manufacturing ETF and just sit on it, something which happens to consumption, say, 10 years ago. If you look at on the active side, the outperformance which, say, the banking funds have done to the benchmark have been staggering last year. While if you see the last 1 year, the mid and small have actually on the active side struggled to beat the benchmark. So once these data start propagating over a period of time, does this change happen? Right? I hope it doesn't happen for the sake of active, but if it happens, and that's happening at the broader market cap indices, so we see a shift towards the core Nifty 50 kind of products. But already we are seeing through factors some low vol or alpha products already making its mark. So we are at a very exciting times where we are bringing those products to India. But bringing those products is step one. You have to back it up with good liquidity, good tracking error, and that establishing of all that is happening. And once we get a sizable track record on all that, will this inflection point happen? So that's where we are. We are kind of maybe 5-6 years behind what Evan is talking about, but we have this great advantage of watching markets like them and getting in those products far quicker than other countries could have done, say, 10 years ago.
We need to deepen the markets more, right?
Yes, it will happen. I think that's happening with the construction or the building up of the broking industry. They go hand in hand, and it's going to be a good symbiotic relationship there.
So watching out for that for sure. I mean, we have got to talk about the crypto space, right? There's been talks around the Bitcoin ETF as well. Do you think we will see more money flow into this particular space even after the FTX collapse that we saw? That was not too long ago. Do you think it's getting back the confidence?
Yeah, I think it is. I think it is. So at Global X in Australia, we have the only crypto spot products, so Bitcoin and Ethereum, across the whole Asia-Pac region. We've had those products for about 18 months now. Of course, it was a bit of a difficult time in crypto in terms of wider interest across the market. There was quite a lot of caution, just more broadly, not just on the ETF side, but right across crypto markets. But that really feels like it's starting to free up a little bit now. So we've seen activity in our products in recent weeks and months that's well above what we were seeing for most of 2023. So it feels like there is some momentum there. And I think also, coming back to the FTX point as well, I think there's a real strong argument for why you would invest in crypto via an ETF just from that. So if you look at the additional investor protections that you get from the ETF wrapper, you have the regulations around it. They are quite tightly regulated in Australia, and I'm sure they will be elsewhere as they evolve as well. So I think there's definitely some big positives around taking what's effectively a speculative investment class, or asset class. No one can really say exactly where that's going to go, but we have a view that it's good to give people the choice to be able to take that opportunity if that's what they want to do with a small allocation of their portfolio. But yeah, in terms of the US story and what's happening there, it does sound like there's likely to be some products coming to market in whether it's December or January. Not quite sure at this stage. It's a little bit of an open question, but we do expect there to be quite a lot of activity in that, and that's potentially quite price positive, at least short term for Bitcoin, and probably a little bit wider than that as well across the crypto asset class.
Oh, absolutely. I mean, the way Bitcoin has jumped this year, it looks like it's definitely coming. What was the initial response like when you did get the ETF?
It was interesting because we actually launched the product on the day that the stablecoin blew up back in 2022. So there was a lot of build up to it. There was a lot of interest in advance, and timing wasn't amazing, to be honest. Yeah. But it was definitely a very newsworthy story across the Australian media and more broadly at the time. And it's something that people have been keeping an eye on, and it's definitely an emerging sector. It's as I say, we've seen more activity in probably the last 2 months than we've seen for the rest of 2023. So something that we're pleased to be involved in and have a long-term view on.
Okay, so of course this is something we'll be tracking, but of course thank you so much, gentlemen, for joining us today, for giving us a perspective on passive investing, the ETF side, and something that everyone has an interest as well in, that's Bitcoin ETF. So it's a pleasure to have both of you in the studio with us today. But with that, we'll take your leave on this edition of MF Corner today. Stay tuned to CNBC-TV18 for more news and updates.